All right, a very warm welcome to everybody. We're delighted to be joined again by Bob Vale, the CEO of ClearStar, and with him also is Jennifer Balleza, the interim Chief Finance Officer, and they're here to talk about the 2018 results that have just been released, which must have been very pleasing, Bob. A record revenue and prospects looking good.
We're very happy with the results, Andy. We've had great traction coming through the end of 2018, which resulted in some wonderful numbers for us.
And is that traction continuing into 2019?
Absolutely, it is. We invested in a top-notch sales team in the last quarter, all coming from industry rivals, with a level of expertise in different geographies, different industries. And we're seeing a very fertile sales funnel. As a matter of fact, we've processed in the fourth quarter more RFPs, in the first quarter of this year, more RFPs than we did in entire 2018.
Oh, you're setting yourself up for a challenge in the second quarter on that basis.
Willing to accept that challenge.
So maybe let's dig a little deeper. And where is that momentum coming from? Let's look at the sectors in which you are active at the moment.
Well, where we've had a great deal of industry dominance is, of course, in the medical information systems. That's been growing quite aggressively. We finished the year off at that being about 42% of the company's total overall revenue. And that's been anchored by our ClearMD product, which is tied to over 9,000 repositories, all of the major laboratories, and has really been a mainstay for us. It's being used quite handily by a lot of our competitors who white label our product. So that's a very significant head nod for us.
Is that the Clear ID or the Clear MD?
ClearMD product, yes.
Which is the drug testing.
The medical information systems, yes. So that's being used handily, as I said, by a lot of our competitors. Second area, which was where we're really driving a lot of our growth, is to the direct employer. And this is where the salespeople have been really focused. We're seeing great success in transportation, aviation. We've announced the Gulfstream contract back last year, and that's in the General Dynamics vein, and that's been very fertile for us. Of course, we're continuing with home health care, visiting angels, and we're seeing a lot in the area of hotel management, anything that deals with transient employees, trucking, transportation. Those have been the two drivers for us.
And driver's a very appropriate phrase there. I noticed that humour there. But looking at the whole screening market and the gig economy, the transient workforce, it must be a very, very powerful tailwind to have behind you at the moment.
Well, there's a transformation in the market, and we're doing the best that we can to have the technology evolve with the transformation in the workforce. Background screening is no longer just a port of entry into an employer. It actually encompasses the whole lifespan of the employee, which is why we've been focusing on being more of a human capital integrity company than a background screening company. So it's just not screening the person as they start a particular position, but it's an ongoing screening process, keeping them vital to different employers as they change employers or change job needs. It's not unusual for them to get screened for one employer, but then that employer may place them somewhere else and we screen them again. So it's ongoing.
And does that lessen the cyclicality of the business?
Just the opposite. Compliance, insurance, some of the regulatory changes, as we're getting more into what can be done during the hiring process, has increased not only the level of minutia, but the level of understanding from the standpoint of legal jurisdictions and security that we have to take into consideration, which is making barrier of entry in our market very, very difficult. So what you're seeing is larger companies in our segment, such as ourselves, get bigger, smaller starting to diminish. When we did our float 5 years ago, the market was estimated at around 2 to 2.5 billion. Now estimates are north of 4 billion. As the global economy starts to really take hold, we get to a borderless environment. We're screening people out of country as vendors. It's quite dynamic.
So just to sort of clarify, I think we're on the same page there. Just the opposite to cyclicality is a more ongoing, permanent need for employers to
Absolutely.
have the security and the background information about their employers.
Correct.
And I suppose that might even extend to your primarily exposed to the US economy at the moment, which is running along at excellent speed, record lower unemployment rates. But presumably, if there was to be a slowdown, then you're in a situation where there will be more people looking for jobs, and the screening process will still be required, even if there are potentially slightly fewer jobs at the end of it.
And that's true. We've been keeping trends since 1999, industry trends. And even in 2008, when we saw a severe drop-off in jobs, to qualify, to hire more qualified individual, the screening process actually became part of the qualifier. Mm-hmm. So they were screening more people, even though there were less positions.
Yep. Win-win, like that. None of these things, I'm sure, are happening by accident. An awful lot of hard work and investment. So maybe let's just talk about sales and marketing, where sounds like you're starting to see the benefit of expanding that team, and indeed at a senior level taking on new revenue officers. How long has that been in the nurturing, and then can you go on and say which corporates you're actually trying to address in the direct market? Because presumably there's a drive to hit the larger, bigger employees, the tier ones.
Right. So it's really been we've been in a full court press there since the beginning of Q4 last year, and getting not only the sales team onboarded, so it's not just giving them a paycheck, but we have a quite diversified technology, so it's taken a while for them to become familiar with it and competent in being able to relay our value proposition to our prospects. Each of the individuals that we've brought on have pretty much got a market segment that they work in. Some in staffing, which we're making some great inroads in. Some in home health medical, which we have one individual who's very accomplished there. One in financial services, who's really looking at that industry. One in transportation, who's pursuing that. And then other in manufacturing, anything that has to deal with real-time manufacturing or on-need manufacturing. We're also trying to focus our solution at integration points. So as we announced last year, we did a touchless integration with SuccessFactors. Mm-hmm. We're expanding those integrations to be able to serve the customer more transparently. Instead of coming in as an inception point, we come in as part of their funnel and try to expedite the process of hiring.
Mm-hmm. Thank you. Say a little bit about the role of the Chief Revenue Officer that has recently announced.
Yeah, we recently brought on an interim chief revenue officer who came from a much larger company. There was a consolidation of two companies, his being a $200 million company being acquired by a $700 million company, I believe. And we had been pursuing this gentleman for over a year, and he finally saw the opportunity of this merger to make a change. I think it was primarily driven by our product offering, that we could solve some of the problems that he had in his sales process with the past company, and that's worked out real well for us. And the majority of the salespeople that we've been able to recruit have had a relationship or worked for this senior salesperson. So we've got a really good gelled team.
And the investment presumably has not just been in humans. There must be a lot of technology, product development and infrastructure where you've been spending money in recent years.
Well, we're really starting to hit a scale with the technology. Really what we've been able to do is to bring on the sales team. We've scaled back a little bit on our development teams as some of our products have matured and are now at the point of being able to be iterated versus really hardcore development. By doing that, we kept our OpEx pretty flat, even though we brought on a pretty big sales team. We're investing heavily in our drug screening as we've got a leadership role, and it's a differentiation point in trying to make that more fluid, a little bit more touchless. I mean, what's really great about the way we do drug screening, what technology's done for us, it's about 42% of our business, which is at a run rate of a little over $9 million, but we only have 13 people in that division. So the drop through is pretty good. So we're going to keep the technology investment.
I hope you're paying good bonuses there, Bob, in case any of them are watching this. But,
Thanks for that. I appreciate that. Yeah. And then we're investing in our infrastructure again, as the cloud technology has changed greatly and security has become more available out in the Amazon environment, Azure environment, the things where we can get out and take advantage of cloud. Every 3 to 4 years we make a transition and reinvest in our technology, and we're doing that again this year as it was due. So we're upping capacity, increasing speed, and again, taking advantage of security. We'll be spending some money there.
And how important is your technology as a distinguishing factor? Because you are in fact a disruptor in the screening business. Do you have to be one step ahead of the competition on technology, and are you one step ahead or two steps ahead?
So that's difficult to say. I think what we do better than any other technology is we offer a suite of services in our technology platform that are consistent. For example, the majority of technologies out there, when you do a background screen and then you do a drug screen, it's 2 points of entry. First you have to process the background screen, then you have to process the drug screen. That's not the case in our technology. It's 1 point of entry, and then we can then distribute out the requirements as necessary. In the international market, with our Sphere product, we've addressed all the known concerns of GDPR, where we can take into consideration residency of country, how data is to be disposed of, how it can be translated, where it can be kept. And I think we're far ahead on that. So we try to keep a forward vision of how the technology should be versus what the demand of the customer is today.
Mm-hmm. And now maybe let's just step back a little bit. You'd mentioned the SAP success factors being a very, my pun now using the word successful example of integrations, but you have other partners that are extremely well known and blue chip. Maybe you could say a little bit about how it's going with the likes of Alair and Veritas as well.
So Alair is a supplier integration. By bringing them into our medical information services cadre of suppliers, we were able to increase the number of repositories across the United States to about 9,000 plus. That also allowed us to open up the breadth of our service offerings. So now our medical information services group just doesn't do drug screening, but they do occupational health, physicals, and they also do medical, where we're screening people for communicable diseases before they get their vendor certifications to go into hospitals. So anything that takes care of the health side of employment, we have now deployed our ClearMD product, or in the process of deploying our ClearMD product across the United States. And we needed that many repositories to do it and that many laboratories to do it.
Mm-hmm. And do you anticipate further integrations as this year progresses, or the fact that you're in with a number of the big boys gives you a strong position already?
No, we see ourselves as an on-demand product. We're very bespoke when it comes to the client. So if we approach a large client and the opportunity requires that we do an integration to make their workflow easier, reduce bottlenecks from them, we approach the integration. The way we've built our software as a service model, we have a very wide open API environment. It's very easy for us to do integrations. And in some cases, third parties come in at the behest of some of these ATS companies, and they're doing the integration, so they're acting as the middleman. Mm-hmm. And they're finding that we can integrate very quickly.
Great. Well, that's very useful roundup of what's going on at the moment. We might just have a quick word with Jennifer now about the numbers and then come back to you and ask about the future, Bob.
Great.
Right, good to see you, Jennifer. And you've timed it well. Your first set of results to report. You must be really pleased with growth margins. What was the highlight for you?
So the highlight is our revenue increased by 13% to $20.1 million in 2018 from $17.8 in 2017. We've improved our EBITDA. So we have EBITDA of $154,000, which has improved from a loss of $381,000. And then we've also improved our bottom line. So we have a $1.3 million loss. It was about $1.9 million loss back in 2017. And we still have cash on hand at about $900,000 at the end of the year, with our full line of credit available.
That sounds a pretty good combination. And what's going on underneath the bonnet if we were looking at expenses compared to the revenue growth? I would hope that expenses are not growing at 13% either.
No, our OPEX has been pretty consistent for the last 3 years. which is phenomenal since our revenue has increased so much. So that just kind of evidences that we have scalability with our business by our expenses not increasing along with our revenue. And we've taken advantage of our supplier pricing for volume pricing as our volume goes up with our customers. And we've tried to be proactive as far as keeping our costs down. You know, we use our technology strategically to help automate a lot of our processes to keep our costs down.
So I think Bob was referring to this earlier. You should have very nice operational gearing.
Yes.
With the revenues continuing to grow. Touching wood here too. I'm sure that will be the case. So it's going to look very nice at the bottom line.
Yes. Yes.
Good. And let's look a little bit more at the balance sheet. Was the business generating cash this year?
Yeah. So we had positive operating cash flows this year, which is a welcome change from our historical performance. Our AR is up in line with our revenue, and we continue to invest in our technology to differentiate ourselves out in the marketplace.
Yeah. And so it'd be reasonable to assume 2019 should see similar trends going forward.
Yes. Yes.
And you mentioned the facility, the banking facility that you have available. Who's that with?
With Silicon Valley Bank. We signed that back in 2017. By design, we knew that we were trying to grow our business and we just needed something in the future that we could use for working capital purposes.
But you have net cash on the balance sheet at year end as well.
Correct.
So flexibility is there should the money required. Again, encouraging. And perhaps last, coming back to expenses and thinking about humans and recruitment, appropriately enough for your business, but how many employees are roughly within the group at the moment?
We have about 80 employees.
Mm-hmm. And is that also growing, or again we're looking at the situation where, because you've invested so much in automation and technology, you don't actually need...
We don't have a lot of volatility on that front, which is good. We've kind of downscaled our technology team since we invested on our sales side, so which has helped us maintain that consistency in our OpEx.
Mm-hmm. And has there been a lot of spend on marketing now that the business is making waves, or...?
We've been pretty consistent on our marketing spend compared to 2017. We kind of upped that in 2017 to increased brand awareness in the marketplace, which I think has paid off. And so we continued to invest in that effort in 2018 to make sure we take advantage of the velocity.
And are all the salesmen based centrally in Georgia, or are they next to the client? So you've got some people based on the West Coast.
They're kind of spread out throughout the country, which is nice. We do have some in Atlanta and Alpharetta, but no, they're kind of widespread.
Yeah, lots of excuses to go and visit them and keep an eye on them going forward.
Yes.
Yeah, well, that sounds very encouraging, and hopefully we'll see you in a few months with a continuation of that trend.
Excellent, thank you.
All right, Bob, you mentioned earlier on that the first quarter had got off to a cracking start, and in your update today you said that you were online to match expectations, which all sounds very encouraging. Do you want to look a little bit further down the road? Where, what are your ambitions? How far can this business go on a 3 to 5 year view?
So our goal is to target ourselves as a $100 million company. That's where we see ourselves, and to be able to serve the size of the clients that we're being driven to, that's certainly where we have to keep a watchful eye on obtaining that goal. The higher demand for higher volumes also requires a more diversified service offering, and to get to those tipping points, to be able to acquire that data, manipulate that data, interact with the number of applicants that we have to interact with, we see that as the first tier of the growth of the company.
And what about international opportunities? You're obviously building a strong franchise in America at the moment, but data and screening is a global business.
Well, we are working globally. We're really, even in the U.S., working in a borderless environment. So a lot of our larger customers, when we do them as a U.S.-based or service them as a U.S.-based company, have vendors across the globe. We also do the screening for all those vendors because they have to meet the requirements of the U.S.-based company. So if you're not global right now in this market, if you don't have a good expansive knowledge of all the country requirements and a good reach into how to process that data and keep it secure and compliant, you're not going to be competitive in the U.S.
Yeah, that makes perfect sense. And speaking of competition, is there anybody that you're seeing making a similar push in the areas that you're focusing on?
I don't think they're doing it the way that we're doing it with our mentality. The larger companies tend to be very off the shelf. They thrive off of integrations that have been established for a while, but they're very slow to change their technology. Where our difference is really a cultural difference as much as it is a view of the market. We started as a technology, we invested heavily in it, we take great pride in our technology. We tend to continue to make enhancements to drive the system in a direction that's incredibly flexible. Remember, our technology was designed from the outside in to be able to accommodate many consumer reporting agencies, because that's where we started, where the larger guys designed it to just service a product. So we have a much more flexibility in the way we approach things.
Yeah, and to finish again on hopefully a positive note, the margin implications for this business must remain encouraging as well. EBITDA margins in the mid 20% should be achievable and sustainable.
Right now, the challenge that we're seeing in getting to the EBITDA margin that we certainly know is obtainable is we've got product mix in our MIS function at the wholesale level, and that's just been growing so dramatically. But the company is getting to a size where we're going to start to see a big uplift in our cost of, a downturn in our cost of goods, an uplift in our gross margin, just because we are now buying data at a much larger level. So that's going to allow us to right size our gross margin, and that'll pick the EBITDA up quite nicely. And again, maintaining OpEx pretty flat. So we're really seeing that operational gearing take effect. 4 years flat OpEx is at the level of growth that we are is quite an accomplishment.
Investments are being made, now they can start yielding.
Exactly.
Well, that sounds an excellent note on which to finish. Thank you to you and of course to Jennifer. And we wish you all the best in achieving those objectives. Of course, we couldn't ask the company to make forecasts, but in line with expectations of our analysts implies another 14% growth in revenues, which should take them up to $23 million. So we'll be checking up on you in 12 months' time. For anybody who has not seen the analyst report that Equity Development released after these results, written by Paul Hill, it is of course available on our website. Thank you, Bob.
Thank you, Andy.